Hi, Felix here. Welcome back to another episode of Investing in Property. Just a short recap on what we went through last time. So we talked about goals and the importance of having a strategy in place so you understand exactly what you're looking to achieve when investing in property. But we also spoke about the key drivers that actually allow the property market to grow in value and what they were. One being population growth, infrastructure and investments, employment and education, and lifestyle and amenities. If you wanted to hear what they were again, jump on the last episode and as I described and went through each of them in more detail. And then lastly, I'd also talked about capital versus cash flow and having a good balance between the both of them when setting up and building your portfolio. So now you're ready to invest and you want to know how to get started. Well, I've listed a few things to get you moving and in the right direction. The first thing is to have the right team in place. And what I mean by that is having the right professionals on your side. Secondly, is actually having a strategy that lines up with your lifestyle and financial goals. And then thirdly, what I wanted to do was actually show you a case study to share with you the type of properties that we are sourcing for our clients and the type of strategies we're implementing to ensure their goals and needs are being met in the property space. What I've understood and learned about successful people is that they have a common factor in place, and that is they either have a mentor or a coach guiding them through the journey of life. Similarly, in the property space, if you want to be successful, you need to have a property advisor or coach in place to ensure that the strategies you are thinking about do line up with what your goals and aspirations are because they've been through it, they understand what works and what doesn't, and they'll be able to share their experiences with you. The other important professional to have on your team is also a financial planner, an accountant, okay? Because property isn't just about the asset and the house. It's how to position yourself in the most tax-effective way in terms of ownership and exit strategies. Once you have your strategy in place, it's then important that you speak to a mortgage broker or lender to understand what your borrowing capacity is and if it does line up with the strategy that has been put in place. You also need a legal representative, so a conveyancer or solicitor, to obviously vet the contract so you understand the legal requirements when you actually enter into a contract to purchase a property. Now, if you're investing for the first time, what's important is actually to build strong foundations. And what I mean by that is having a really strong asset base as your first property. Think about the characteristics that builds a strong foundation. We're looking at properties that are going to give you strong equity growth. And the reason being is that rather than trying to save for a deposit, you want this asset to be the driving force of allowing you to draw equity upon it so that you can actually use that as a deposit to purchase the next investment property. Now, once you've purchased the first property, you're probably super excited in terms of getting your foot into another one. Okay, now what's important now is to actually reassess your position and your financial and lifestyle goals to understand whether the next property should still be one that's heavily strong in growth, or should you be looking at a more balanced approach and looking at something where the yield might be quite stronger at a lower entry point. So that's what I mean about building a strong but also a balanced portfolio, because as we've seen in the past 14 months, interest rates have gone up 4%. Now, another element to ensure that you've built a robust portfolio and you're investing well for the future is to look at properties where you can actually manufacture wealth. And what I mean by that is looking at properties where you can actually cosmetically or structurally add value to it. But also, if you have an appetite of looking at development, it's also good to look at properties where you can subdivide the block or actually build townhouses. So to give you an idea of the type of investments that we're sourcing and purchasing for our clients, I wanted to share with you this case study that allows you to understand what to look out for when starting your investment journey. So this property we purchased for a client earlier in the year. And so obviously the goal and strategy and focus was to ensure that we purchased something which was going to give us some substantial growth, not just now, but in the future, having some key drivers and infrastructures in place to allow for that, but also having a good rental yield, because we understood that rates were moving at a quick pace and we wanted to ensure that the rental was sufficient enough to obviously pay majority of the actual mortgage repayments. But also, as I mentioned earlier, we wanted to have that element where we could look at manufacturing growth and wealth. The reason why we selected this property was it had subdivision scope. Based on the requirements within the Cleveland precinct, you needed to have a 20-meter frontage and a minimum size block of at least 810 square meters. As you can clearly see in this case study and this property that we've purchased, the total block size was over 1,000 square meters. So, and obviously the frontage was more than 20 as well. To give you an idea in terms of what vacant lots are actually selling in Cleveland, this block of land on 500 square meters sold in Cleveland in November 2022 for $550,000. So we purely just look at the land value on this opportunity that we bought. The land value is actually worth $1.1 million once we subdivided the block. Now we only paid $871,000 and we still have a house on it. So with this purchase, we've ensured that we've met the needs and strategy requirements of the now, which is to have a house positioned in a location with some substantial growth. As you've seen, Cleveland has grown approximately almost 8% over the last year on average, and in the last 12 months, close to 11%. But also looking at the long-term advantages, which, Brisbane, we're seeing the Olympic Games coming through. So there's going to be a lot of potential there as well, given the fact that Cleveland is only 35 to 40 minutes from Brisbane CBD. But then if we look at the aspect in terms of rental yield, we're looking at close to 4% for a house as well. So we've ticked off the boxes with regards to our current and future needs with regards to servicing and capital growth. But as I mentioned, that other element which is going to help bolster the actual capital manufacturing growth of your property is this subdivision piece. And that's obviously now giving you some more scope to look when you're looking at an exit strategy, because just the land value alone is worth more than what we've already paid for the property with a house. Now, if you look to go further and actually develop the block and subdivide it, 2 houses down, they've actually gone through and done this project already, where they've built 2 freestanding double-story houses. Each of those houses are worth about $1.2 to $1.25 million in this current market. So as you can see from this example, there are definitely great opportunities out there, and you just need to know what to look out for and what to target. So, when they say you can't find anything under $1 million, it's out there and obviously it's achievable. You just need to do your due diligence and actually have a strategy in place so you understand exactly what you're targeting. And this is why I go back to the point of having the right people in place, because if someone's already done it and they've already purchased a property similar to that, they would have the right contacts in place to ensure that they can find similar deals and similar opportunities. So it's very key to have the right team in place, the right professionals, coach, mentor supporting you. But also once you've done that is then to kind of build a strategy that's going to support you now and for the future. In the next video, what I wanted to actually share with you and unpack in a bit more detail is how to go about finding these opportunities and the due diligence required. So stay tuned and we'll look forward to seeing you in the next video.